In today's video, I'm going to give you 3 Yieldmax buys for the month of November. Our Yieldmax buys for the month of October absolutely killed it. And now I'm going to share with you what I'm buying for November. Yieldmax helps me earn over $400,000 per year in dividends, as you can see below. And our performance value shows that we're beating all of the indexes with Yieldmax and some margin. We're up 32% for the year. The S&P is up 20, the Nasdaq's up 20, the Dow's up 11, and the Russell's up 9. We're also at 0.53 on Friday, or $8,000, and 0.53 beat the S&P, as you can see above. So we're living financially free out of our brokerage accounts using Yieldmax and some margin. If you need help doing the same, email me for my e-guides at akintod48@gmail.com. For every $1 you put in your account, you get $4 of purchasing power. I'm just using a fraction of that over $1 million in purchasing power to get ahead. This debt of over $600,000 does not show up on a credit check to banks. So I don't mind owning this debt because, as you can see, I'm outperforming with this debt. We're up 32%. And in the last down day we had on the market, we still outperformed the Nasdaq that day, even with all of that leverage. Some people say they love my videos but hate my intros. I'm not bragging, I'm just telling you that margin works even in down markets. In fact, margin even helps you lower your risk, because if you're getting more dividends on margin, that lowers your break even faster. The key is to use margin properly, which we'll discuss in this video. So again, this debt does not show up on a credit check to banks. These dividends that I earn off of margin help give me qualifying income to banks for loans, which stock gains can't give you. It's low interest because I've negotiated down twice. Many of my clients who bought my e-guides did the same thing, because when you buy my e-guides, you get free access to my phone number for life. So you can call me anytime and I'll text you the script to negotiate your rates down. And it helps lower your risk and lower your break even faster with our dividend funds. So last month we covered Google and Coney, both of which had a monster run. Google had a nice spike here out of this consolidation pattern. Coney also had a monster move. We covered that below the 200-day moving average. Now it has since pulled back. Maybe it's time to buy some more Coney or Coinbase, but that's not what I'm covering in this video today. So last month we did Google, Coney, and some other stocks for October. Go check those out if you haven't, because all of them did very well. But this month for November, we're going to be buying some Microsoft, MSFT. Microsoft, MSFT, is one of the largest weightings in the indexes, so I want to buy this stock on the dips. Here we got a perfect pullback to the 200-day moving average. So this looks like a textbook buy. And so I'm buying Microsoft, of course, to get some capital gains appreciation. But then I'm also buying MSFO for Yieldmax. I used to own a lot more of MSFO when it was 30% maintenance. Now it has changed to 50% maintenance. So I don't want to put too much in MSFO, especially when I'm using margin. So I'm going to be buying MSFT because MSFT is 30% maintenance. And then I'll be buying a little bit more of MSFO just to get extra income in the process. But MSFO, once again, is 50% maintenance, so keep that in mind. If you need help understanding maintenance, that's in my Volume 3 e-guide. Maintenance is the key to living financially free out of your brokerage accounts. We can always withstand over a 20% correction because we have low maintenance names, okay? And if we have over a 20% correction in the market, I always keep put options on for insurance. If you need help insuring your portfolio with put options like I do, that's in my Volume 5 e-guide. So the first Yieldmax stock that I'll be buying in the month of November is Microsoft. Microsoft had a pullback to the 200-day moving average, and QQQ, the index for the Nasdaq, has pulled back to the 50-day moving average. So this bodes well for the market and most Yieldmax stocks, because most Yieldmax stocks are tech related. So I want to buy some more index names. My favorite index name is Cornerstone because it is the entire index. So if you're buying Yieldmax, make sure you're staying anchored to the indexes. The majority of my money is focused in the indexes. I keep small amounts of money in Yieldmax. Cornerstone has a 26% premium right now when you drip its 21% dividend down at the NAV. So every month we're getting 21% dividends from Cornerstone, and we're getting a 26% gain on top of that. That's why Cornerstone is a 5-star fund here on Morningstar. If you don't know about Cornerstone, it moves upward, left, or right on its 10-year chart here. This is a 10-year chart of $10,000 invested. But if you go to Cornerstone's chart on E-Trade, you'll see that yes, it moves upward, left, or right on a 1-year chart, but on a 10-year chart, it moves sideways to down. Okay, so why does Morningstar have Cornerstone going upward, left, or right on its chart, but on Cornerstone's chart with E-Trade on a 10-year chart, it's going sideways to down? That's because you have to factor back in dividends, drips, and rights offerings for closed-end funds like Cornerstone. If you need help playing Cornerstone properly around its rights offerings, that's in my Volume 4 e-guide. When you buy my e-guide, you get my phone number for life, and you get free Discord access for life where we alert you of the Cornerstone rights offering announcement. So we get this announcement before the actual announcement because we get the N2 filing here. So that gives us plenty of time to react to the Cornerstone rights offering announcement. And that's how you really level up your account, everyone, because you can pocket the 20% premiums that Cornerstone averages per year, the 20% dividend that Cornerstone averages per year, and the premium gains, which as you can see here are 26% each month. So you don't want to pass up Cornerstone, and you want to anchor your Yieldmax funds to something index related. Why not Cornerstone when it is a 5-star fund and it's 30% maintenance, so it preserves all of my equity? So we could buy some YMAG because QQQ is on the 50-day moving average, but YMAG decays significantly. So QQQ made it back to the old highs. YMAG did not make it back to the old highs, but Cornerstone did make it back to the old highs. That's why I really like Cornerstone. Now, really, this isn't a Yieldmax name. The first Yieldmax name I gave you today was Microsoft. I guess you could call the second one YMAG if you like that play, but it doesn't have much diversification in YMAG. That's why I like to stick to the indexes. YMAG is also 50% maintenance at E-Trade, so be aware of that. You can go to other brokers with lower maintenance, but they might not have that special drip for Cornerstone. Also, you can go to other brokers with lower maintenance and the special drip for Cornerstone, like Fidelity, but you don't want to use too much leverage just because you have lower maintenance. That's how you get into trouble. You want to use small amounts of margin, only amounts that dividends can pay back, and you want to keep your available withdrawal high so that you can withstand over 20% corrections at all times. Even if you can withstand over 20% corrections with your lower maintenance at other brokers, you don't want to have too much in Yieldmax stocks because they fall by the amount of the stocks and they fall by the amount of the dividends. So there's a lot of erosion in Yieldmax, and they cut their dividends in down markets. So you're going to really cannibalize your account and lose performance if you have too much Yieldmax names on just because they have lower maintenance. So always be very careful when you're using your margin. Let your margin lower your risk and get you to a break even faster, but don't use too much margin with Yieldmax to where you can cannibalize your account in down markets. Keep your Yieldmax allocations small and overweight your allocations to the indexes like Cornerstone. So the third play that I have for you all is QDTE. It's not a Yieldmax name, but who really cares about that? This is Roundhill. QDTE is fully diversified. It erodes some on its chart, but it has nice monthly dividends that can compete with YMAG. All right, so you want to stay diversified with Cornerstone, Yieldmax, and Roundhill funds. Roundhill can be great. They sell calls. So in upward markets, we get dividend increases from Roundhill, and in downward markets, we get dividend increases from QQY because they sell puts. So we need Defiance for down markets, Roundhill for up markets, and you need Cornerstone for your growth because Yieldmax doesn't really grow much, okay? They erode on their charts. All right, so if you need help living financially free out of your brokerage accounts, email me for my e-guides at aikentod48@gmail.com. We're outperforming all of the indexes with Yieldmax and margin, but we keep our margin small as a percentage of what we can actually buy with all of our purchasing power, and we keep Yieldmax small. These Yieldmax names that I mentioned in this video should increase our outperformance even more, and they're going to cash flow us regardless, because even if we're wrong on these predictions, the dividends help cash flow us over time regardless. So even if we lose in these names, if we collect the dividends long enough, we're going to win anyway. Just make sure you follow the rules when you're investing with Yieldmax and margin. All right, if you like this video, please click like or subscribe, and I'll talk to you soon, everyone. Thanks.